YouTube. This is Danny. Today's Tuesday. This is the third time trying to record this video. Something's going on with my computer. Um, so I had a few questions in regard to the previous two videos that I've made. Some people made some nice profits, nice trades based on the previous two videos where I said to just kind of wait for price to trend, and then once it breaks trend, uh, to short. But it's not you can't do that all the time, right? Like there's certain things that I look for. So first, I want to go over the trades that I've took today. I took two trades, one on Nvidia and one on Facebook, and let's go over on Nvidia, the trade from Nvidia. I mean, as far as like overextension, we're definitely overextended here. So we're I mean, I don't know if no one knows if this thing is going to keep pushing down or not, but what I do know is that we're at levels of support that are very important. So we need to be care. I need to be careful shorting. Even though I shorted today, those was both trades were shorts or bought puts. So what I was looking for, if you guys already don't know, I trade wedges, I trade channels. I look for key support and resistance levels. I trade breakouts, breakdowns, so on and so forth. But today, what I was looking for, two things. On Nvidia, I saw this wedge here, right? I used the 15 minute. So I saw this wedge. I know that on the daily, I know that we are at support levels, right? But the sentiment of the market is to the downside. But I'm a day trader, so I just want to catch, you know, one quick trade and that's it. So I really don't care what happened. I do care, but um, I'm also, watching smaller time frames, which is, 15 minutes and the 1 minute. So what I was watching on Nvidia was that we're in this consolidation. I was not looking for. So if we go down to the 1 minute, right? Hopefully you're able to see. This is this is how it looked. So I was not looking for a breakout, and the reason why I was not um, was because we had a lot of overhead resistance, right? We had this line here, and then we had this 211 level that's very key level. So I was not looking for that. Instead, what I wanted to see was a possible double top here or even up here to short, um, and or a rejection of this and a push down, right? So what happened was that price, it pushed up, faked out some longs, and it came back down. Then I was looking for this level here to break this 198. We got here. The reason why I didn't short here was because for me this is overextended. It's about 7, 8 points. I don't know if this thing is gonna come down and then base and then push up and give me the trade, the double top that I wanted. So instead, I waited, pushed up, rejected, and came back down. It pushed up. I waited a little longer to see what this level was going to do. As soon as it reject, I went short or about up one put, and then I got out right away for some profit. It doesn't look like much, but this is like 2 points here. So it's a scalp, right? Like I'm not looking to hold anything, especially on this particular trade here, because I really don't have any level to risk off of. I mean, my risk was literally right up here, like this green candle here, right? It pushed up this green candle. If it reclaimed this candle, I was out, right? So that's the reason why I didn't. I was not comfortable. I knew it was a scalp. I was not comfortable holding this. Yeah, I did go lower, but that was not the trade. And basically Facebook, the same pattern, right? Um, I was even though we're basing here, I was not looking for, we opened right in the middle of this wedge here. I was not looking for, basically I was looking for a breakdown pullback or a breakout and then a retest of this level to push up, right? Why? Because I I knew that that pushing up, let's say we pushed up to the highs here, we're gonna be overextended. Same thing for to the downside, right? It opened right here, it came down. I was, even though it was a breakdown, like I wasn't comfortable shorting because I don't know if this thing is gonna come down and then it push up. Like it was, for me, it was overextended. So what I did was I waited. I always wait for a 50% retracement from where the market opens. Um, and we had the 50% right here. Another, not confirmation, but once it hits the 50%, what I'm looking for now is price action. See how it's going to react. There's going to be some shorts, some stops right up here. So what I wanted to see is what happens right after this. Um, these stops get hit. So it pushed up right here, stops. Most likely some traders got stopped out, pushed up, came back down, pushed up, couldn't make a higher high here. It's right at the level, a level that we're overextended, uh, right at a level that I want to short into. So I took a short, about a put, and then it came down. My target was the VWAP. I didn't it, it didn't even get to that level. Like I took my profits right before. Like I said, I'm trying to scalp this market for now. Doesn't look like much, but once again, it's like almost 2 points um, of profit. So that's it. Now to the question that someone asked me, I don't just like, yeah, this market, like whenever I don't have like a wedge or a pattern that I usually trade, um, yeah, I do want to um, wait for price to kind of get overextended, make higher highs and higher lows, wait for price to break the trend line and then push down. And this, it keeps working. But um, when I have a pattern, like when I have a setup that I follow, I follow that setup, right? I follow that setup, and just going back to the break, how do I trade? Like for example, in this case, right? If it let's say I was waiting for price to break the trend line. Someone asked me if how do you do it? Like, do you wait for price to like certain wait for it to break like I don't know a few minutes or a few candles? Like no, that's not. To be honest, um, that's not the case because the market doesn't do the same thing all the time. Like for example here, right? If I'm waiting for price to break the trend line, the first thing that I would do, and this is what this is in the real, like if I, because I'm only trading very small size right now, but if let's say I was trading equities, or let's say I'm trading like 4 or 5 contracts, let's say 4 contracts, what I would do first of all, first off, I would, since I know there's a level here, and it's right at the top of this. Look at this chat. Look at the wedge here. Look where it came. It came right to the top of this wedge, and then it got rejected, right? So the way I would trade this, it would be, I would um, kind of went parabolic here. So I would go short. I would buy one put here, and with a risk of, and one here, and I will add another put right up here, right? That's what I would do. And this is kind of like the 30 30 70, right? 30% front, the front side, and then 70 once it confirms. So that's what I would do. I would buy one put, or I would, 30% of whatever size I get here, one here, and yes, I know it's a lot. I mean, it's almost 4 points, but That's why you gotta size accordingly. I mean, 4 points, it's nothing right now, right? Like from here to here is 4 points, like it's nothing. So you gotta size accordingly. So that's what I would do. I would short here, add here, and let's say it breaks this or it breaks the level, I will get out, I will lose. But let's say I go short here, it never gets to this level. Once it breaks the trend line here, see like this, it came down, it pushed down. I'm not gonna short right here because I don't know if this thing is gonna push up. What I would do, what I will wait for is a push down and pushed up, see how it rejected the trend line. Maybe I would not short right here, but once it breaks this low, then I could short here and I could lower my risk, right? Once it breaks this, makes a lower low, now I could put my risk here with my add, right? So I have an average, my first entry right up here, and my add, once it breaks down and I short, um, my add is here. So let's say it fakes out, it comes back down, and it pushes up. I will stop out of my add, and I will just keep this other position here. And then once it confirms, you can always add more, right? And I mean, it would have worked well. Um, so that's how I played the breakdown um, of a I mean a break of a trend line. Like for example here, like this one's kind of hard, right? See how it got very overextended from this trend line here, right? So like all of this is just the front side, right? Um, let's say you want to play the front side, so and you have the lines. These are the lines that I trade off of, and these are the highs and lows of the previous days. So let's say I would have went short. Um, I mean, most likely I would have covered here, and I would short it again, add, right? Because I only do two ads based on the lines. Add comes back down, right? Push down, right? So let's say it you would have went short here, right on your ad. Once you broke this, it would have worked out. But this is the better ad here. Once it pushes down really hard, and and this is what I'm looking for, right? I'm looking for a push down, a break of trend, a push up, and this is where you want to short to the downside. So you gotta kind of play by um, you gotta kind of like know that the market doesn't do the same thing all the time, right? Like this little pullbacks, it's not really a pullback. It's just just kind of stopped a little bit and it came back down. So if I was to short here, I would wait for a break of this, and then my stop will be like very small here, very short, and and if he pushes up, then I stop on my ad, right? But this is what I look for. Push up, a mini higher low, and then boom. So that's the difference, guys. All right, stay safe. Hope this helps.